This is now really the wake-up moment for Germany, for the German economy. The German economy has been stagnating now for almost 4 years. This is now really the moment to also put money on the table.
Plunging profits, sluggish sales in China, and tens of thousands of German jobs on the line. Volkswagen is facing the biggest crisis in its more than 80-year history. To talk about this, I'm joined now by Carsten Brzeski, Chief Economist at ING. Hi, Carsten. Good to have you with us today. Now, a lot of people here in Germany were really shocked at VW's intention to close factories here. Were you surprised?
Well, we knew that was coming, given the news that we actually heard since the start of September. But I must say, this was still worse than expected. Currently, the announcement of 3 factories being closed, a couple of 10,000 people probably losing their jobs. So that is, I think, this is worse. This is more severe than most people had expected.
Now, VW has claimed that some of its German plants are twice as expensive to run as their competitors abroad. If you compare labour costs internationally, is it fair to say that Germany in general is just too costly a location for car makers these days?
Well, I think the rest has caught up, and in all honesty, Germany had been characterized by decades of wage moderation, and of course, Germany the wage levels are higher than in developing economies, but I think that the gap between Germany and many developing economies has clearly narrowed over the last couple of years. I think what adds to the cost is clearly higher energy prices and then other prices than only labor costs. Plus, we also know that German workers or German employees in general are normally higher qualified than employees in other countries.
When it comes to competition now, the EU has just imposed an additional 35% tariff on Chinese cars, something German car makers were really unhappy about. What effect do you envision this having on VW?
Well, the idea by the European Union is that, of course, it would help domestic car manufacturers. It would shield them against Chinese competition. But I think we know from the past that this is only a very temporary, a very short-lived strategy. Yes, indeed, it means that Chinese cars are getting more expensive in Europe, which in the end will mean that the consumer will simply have to buy or to pay higher prices for the cars available. But it doesn't mean that automatically Volkswagen will sell more cars, because in the end, this competitiveness issue of Volkswagen or the European automotive sector in general is not only cost related, it also is innovation and technologically related. It goes beyond the European market, goes really into global markets. Plus, these kind of tariffs only work if the shielded sector is really using the time to innovate, to grow, to restructure, or however you want to call this. But so by that, the European Union buys some time for the European automotive sector, but that is time that the sector should really use.
And time is really in a short supply right now, isn't it? Germany's car industry is so important for the overall economy. What kind of response do you think we can expect from the government here?
Well, I think twofold, because to some extent we know that the state, the local state government of Lower Saxony has a seat on the board of Volkswagen. So there might still be some changes coming in these announced or leaked plans so far. I don't think that they will be able to really reduce the plans, but we might see that maybe factories in other places will be closed and not in Lower Saxony. That is one thing. We know also that there had been a couple of meetings in Berlin with the federal government where the bad thing is that the German government is not talking with one voice. So we had two different summits, one led by Chancellor Olaf Scholz and another one led by the Liberal Party and Finance Minister Christian Lindner. So what could the government actually do? Not a lot, because the government will not be in a position to make Chinese cars less competitive. So you could think of short-lived measures like, for example, new subsidies to purchase electric vehicles, maybe to purchase domestically manufactured vehicles. But this is only short-lived. The government really will have to focus on how can it make the German economy more competitive again? And by doing that, it would also help the automotive industry.
With that in mind, though, if you were to sit down with VW boss Oliver Blume on one side of you and German Chancellor Olaf Scholz on the other, you have 3 beers in front of you and both men are asking you for advice, what would you say to them both?
Well, what I would say, and I'm the macroeconomist, so I'm not the real car expert, but what I would say is this is now really the wake-up moment for Germany, for the German economy. The German economy has been stagnating now for almost 4 years. So what Germany needs is investments in infrastructure, in digitalization, in education, and at the same time reduce red tape, reduce regulation, allow for more creativity, allow for more innovation, and that should help the entire German economy and also the automotive sector.
But why hasn't this happened so far? These problems are so well known to us. Why haven't we seen any movement yet?
That is a very good question, because these problems, we had the discussion last summer about Germany being the sick man of Europe, yes or no. We have it again this year, and very little has happened. Now, to give the current government some credit, a few things have happened. We've had a lot of plans, actually also ticking many good boxes in terms of structural reforms or reducing red tape. But the only problem is that due to the constitutional fiscal debt break, this government is not able or willing to really put a lot of money on the table. And I think this is now really the moment to also put money on the table, directly or indirectly. I'm not saying that the government is a better entrepreneur, but a government needs to provide public goods, and public goods are infrastructure, digitalization, education. So the government really needs to invest right now. And of course, in theory, you could say, well, then cut expenditures somewhere else. But this is not happening. So the constitutional fiscal debt break right now is probably the biggest reason why we have a government in Berlin that is not talking and thinking with one voice.
I've heard the argument made by other economists that Germany has a responsibility to show fiscal responsibility within the European Union, and that is the reason why this debt break has to be enshrined in the Constitution. What would your response be to that?
It can be enshrined in the Constitution, and Germany had a responsibility at the start of the euro crisis more than 10 years ago, because back then it was the right thing to do. Germany wanted to lead by example in a sovereign debt crisis. We no longer have a sovereign debt crisis. We have an economic growth crisis. We have a structural crisis. So if not investing right now, when will then be the right moment to invest? This is really the moment to invest. And if Germany can show also to the rest of Europe that it is willing to do these investments, that will actually foster growth in the longer run, I don't see any problem by Germany being, the right example. I think right now the risk rather is that Germany shows the way to more stagnation for the rest of Europe if it continues on this route of austerity.
German Finance Minister Christian Lindner has been arguing that Germany may perhaps have to go back on its climate targets to be carbon neutral by 2045. What is your opinion on that?
Well, I think we just have to look out of the window and check actually the weather, the weather turbulences, turmoil of the last couple of years. I think reducing or going back on your climate targets is not the right way forward. This would also be just very short-lived relief, and could also come with higher costs afterwards, because we increasingly know what the economic costs of climate change are to an economy. So I think the better way was not to reduce, not to go back on your climate targets. Really, get going, come up with a plan that is really feasible over the next 5 years, that will not be changed every day or every week, and really put investments in the German economy, because this is the only way by which Germany will become again more attractive for domestic and also foreign investors, and will then, after a while, also deliver higher growth rates than we're currently seeing.
All right, spend more, get more. Carsten Brzeski, Chief Economist at ING, thank you so much.
You're welcome.